Okay, so my friend Abdul wanted me to share with you some information about can you really get rich with trading bots? Okay, so here's the truth about trading bots, or they've been calling them expert advisors. I don't know who started that. Sometime in the last 12 months, I started hearing them calling them EAs or expert advisors. Really, it's been more like the past. So I'm feeling this middle of March 2025. I'd say the past like 3 to 6 months, I first started hearing people calling them that. So that's a new cool buzzword for them, the expert advisor. But it's just a software program, really something pretty simple actually, for something called AI. It doesn't know it's alive, it doesn't know what it's doing, but it does know whatever parameters you set for it. Is the market going up or down for a specific security that it's tracking, and what to do about it, right? So, are they profitable? Can you make money with these things? You could definitely lose money with them. You'd possibly lose all your money trading stocks or cryptocurrencies at all, with or without a trading bot. You use a trading bot, you could potentially lose everything. So these are definitely not risk-free, and some of them are probably unsafe, but some of them are maybe worthwhile, and that's why they've become so popular, especially lately, and among cryptocurrency traders using the blockchain to trade. So it's possible to make more profit using an expert advisor, an EA or trading bot, than you would yourself trading liquid markets for a number of reasons. Anything a human can do, the computer can do. When you're trading, you try and find patterns and use those notice what the patterns are that keep repeating in whatever market you have. And if you have enough data, if you have enough patterns, you can, with some degree of certainty, you can make trades that take advantage of those patterns to increase your profits. The computer can do that too, but it has some advantages. The computer can go faster, so you might notice patterns like over the multi-year macro market cycle, or you might notice patterns over a year, or monthly, weekly patterns. You might notice, on Sundays, prices are always a little bit lower, and then on Mondays, prices always jump, but the computer can find patterns. The computer can read the entire graph, if they get caught up to where we are today with all of the data from the entire history of this market, in about a minute, and then tell you where all the patterns are, and can down to the minute, or even like fractions of a second, can trade patterns. So we're talking about some pretty sophisticated trading bots that can trade that fast, do flash trading or algorithmic trading, what you might call it. But Wall Street has been using programs like this and computers to do that since like the 1980s. And they're so fast that guys on Wall Street, they dispute with each other over how close their computer gets to be to the server, like how many feet or meters of Ethernet cable between their computer and the server that they're getting the data from on the market's movements in real time, because the computer goes so fast trading these micro patterns in the market that going at the speed of light over 10 meters of Ethernet cable can make versus 5 meters can make a difference the way they're doing it. Now, I don't know if you're going to go online and find anything that's that finely grained in its approach, but maybe, I don't know. In addition to being able to go faster, though, these computers are always on, so it can trade for you while you sleep. It can trade for you while you're at work doing something else. So they're on 24/7, going faster than a human, and they're not emotion driven. They're just program driven. So you just tell it, here's the program. If the 50-day moving average for a stock or a cryptocurrency goes above the 200-day moving average, then sell order, buy order. A lot of this is, these are just kind of basic trading features on like major cryptocurrency and stock exchanges and brokerages that you can set orders like that, and that pretty much that is algorithmic trading, or trading bots or whatever, automated trading, EAs, whatever you want to call it. but they have ones now that are more sophisticated than just that, right? That you can set different preferences, you can set different approaches, you can set all these. There's more that it can do than just those kind of stop losses, and buy orders and sell orders that are automated when a certain condition is satisfied by the market on that platform, and they code these up in like a Solidity for Ethereum, or a Solana program library for Solana. They code them. The cool thing about the blockchain, it's always on, it's automated, and so they can code these things up to work on the blockchain directly, pull the data from the blockchain, and then trade for you. There's several of these out there at the moment, and there'll probably be more as time goes on. They're not emotion driven. They're not emotion driven. Problem with day trading is a lot of people tend to be emotionally driven. So what they found when studying traders is that many traders, a majority of them, like more than half, have almost like a perverse ability to time the market to lose, to make the losing trade, to sell right before the equity or the currency goes up, and to buy it right before it goes down. It's sort of funny that they actually know the pattern, but they for some reason trade it to lose. And that's just from emotion-driven, sunk cost fallacies, different fallacies that it's easy for humans to fall into, and then make the wrong decision. That can happen easily when people start trading. But if you're not emotion-driven and you just follow a simple program, and just do it the same way every time, and don't keep trying to adjust and pivot to the market, then if it's a good market, it's healthy, it's got sustainable, healthy growth, then you probably do okay. That's why a lot of people dollar cost average. So a lot of people will just say, I'm not going to try to trade the market. I'm not going to buy anything that I'm planning on selling anytime soon anyways. I'm just going to pick an index fund, the S&P 500. I'm going to pick some high growth, exciting stock or cryptocurrency because I'm young. I have some extra money that I won't miss immediately, and I'll just see if I can, maybe pile up something nice for my nest egg for retirement, or something big I'm saving for. And I'm just going to devote whatever percentage or whatever dollar amount on a weekly basis, every Sunday evening, or on every 2 weeks or every month when I get paid out of each paycheck, and just on a schedule, just you put in that a certain dollar amount, and then over time it just averages out the market's volatility or its ups and downs. So sometimes you buy on a Sunday and the stock goes down that Monday and you lose a little, but the next Sunday you buy and the stock goes up some, so you gain a little, and it sort of averages out, and you get the general upward growth trend of the underlying security that way. But you can start to adjust this strategy and make it a more responsive program to the market's movements to maximize profits, especially in a really volatile market where it up and down happens with great frequency, even down to on the minute window. You can start to that's a lot of surface area to sort of surf, I guess, and to find more entry and exit opportunities that maximize your return on investment. So you can swing trade, and you can say, well, I know the market is we're in a bear market, and we're going to be, people are just going to keep selling off overall for the next 6 months or year or 2 years. Or we're in a bull market. It's the opposite. People are going to keep buying it up for the next, whatever relevant time span. You can adjust and seasonally or yearly or according to the market. You can say, well, I'm going to be doing more of my buying, as we're on our way up, and then do some selling near the peak and while we're on our way down, right? And you can keep making it more and more finely nuanced until you're down to the weekly level or the daily or the minutely, and that's what these. It's easier for these for a program written by someone who understands these markets to do than for a person. And it's automatic, and it's fast, and it's easy. So these are the advantages of it, of using a trading bot. And so what are the risks? There's just there's the overall market risk. The market could do anything tomorrow. You've got a whole planet trading these markets and everything going on, right? So there's the market risk. So you got instead of your money being in the safest possible form, you've got it. You could get it in as a bar of gold or a stack of dollar bills rolled up in a jar in your backyard or under the mattress. You've got your money out there in a dynamic marketplace that's moving and things are happening, and so you could lose all of it. Stocks, cryptocurrencies, these sort of things are always held at risk. Then there's the danger. Then there's the worst danger, especially in cryptocurrencies. You get scams, fakes, hacks, a trading bot that they've hyped it up, but it's not really any good. Or it's straight up, it's criminal. It's the trading bot is trying to steal the information from your wallet and steal the funds from your wallet, or some other kind of fraud. So there's always that out there. Then there's the trading bot is legit, but it just underperforms. The market does okay. The trading bot, whatever strategy you set or settings you put for the trading bot, and what it does, it just ends up you just lose. Sometimes you win, sometimes you lose. So that's possible. And then another risk at trading bot is too successful. What if it's too successful? You make more money than you were expecting to make, more money than you were ever prepared for, and then things get weird. You develop expensive habits, and then you spend up all your money, and now you're stuck, or your friends or family get weird, or so actually being too successful with some of these things and making more income than you were kind of ever really prepared to make can be weird, can be a risk, could certainly be a risk. It could be harmful for you, and you'd be actually less satisfied with that result than kind of what you're expecting all along, especially with these markets like they are, with this melt up, and some people are just making way more money than they ever, than their parents, their mom, their dad, anybody, than their teachers ever set them up for, than they ever expected. Betting early on something that just is a hit, and then it blows up, and then they make so much more that it kind of ruins their life. In a way, kind of making that much money can be disruptive and sort of almost ruin your life. So these are some of the risks. Key is to have realistic expectations. Do your own research. Don't take someone's word for it. Verify as much as you can doing the research you can online. Be realistic and reasonable, and think about what you're doing a little bit, and do as much research and be as well informed about it as you can. Pick a reputable EA or trading bot, one that's recommended by sources of information that you trust, and you can see that other people online trust them too. Go slow. Use small amounts of money at first, for a new strategy, for a new platform. Just use small amounts, and then over time, as you learn what happens, gradually increase if it seems like the right thing to do, and then after a while branch out and sign up for a second account with a different platform that seems kind of similar to one you've had success on. Then keeping all your eggs in one basket. That way, if any one of them is hacked, rug pulls, liquidity crunch, runs out of money, something, big scam, whatever it is, if any one of them goes down, you don't have all your eggs in that one basket. You've diversified. You're using different EAs, different platforms. Never trade like this with money you can't afford to lose, or money you might need for something else over some relevant future time span. You know, be responsible. Take care. Make sure you're okay first, and then all the rest of this is just extra. You know, for fun. If you are successful with using a trading bot or an expert advisor, and you take profits for realized gains, you sell off some of what you've made and cash out. Be sure to report it as income from capital gains to the tax authorities in your jurisdiction, and use the correct form and pay any obligations due. And also look into tax advantages. Read up on whatever your tax system is, because sometimes there's some tax advantages. Like for instance, in the U.S., if you use a Roth IRA, you can max it out to $7,000. I think it's $6,000 a year if you're like under the age of 50 or something. You can look it up, or up to $7,000 over the age of 50 or 55 or something. And that's money that could bump your tax bracket down the year that you put that into a Roth IRA, and you can do a self-directed Roth IRA or have a brokerage set it up for you. And you can do that with stocks. You can do it with cryptocurrencies. You can do it like Bitcoin, Ethereum. You can do a Bitcoin or Ethereum Roth IRA, and if you've got an extra $6 or $7 a month to put into that, it could bump your tax obligation down, because then it's counted as pre-tax income, and it's like however much you made that year minus that amount, and then you don't pay tax on it until you withdraw the money later. Who knows, years from now, decades from now potentially. So that's the rundown for you. Hope you liked it, learned something, and tell them Abdul hi for me, and thanks.